Hey guys, it's Andrew from Trading Mastery. Well, the financial markets just continue to rally higher, and I want to share with you today my thoughts on where we're at with respect to the current rally we've seen and what's likely going to play out over the course of the next few weeks. Okay, so when we go back, we see that the financial markets fell in the month of February and March, with the S&P 500 falling around about 35%. Now, interesting enough, for the S&P to rally back to its February highs, where we were around the middle of February, it's got to rally 55%. And we're actually within about 10% of that level right now. It's trading well above the 200-day moving average. And what we're seeing is what's called FOMO. We're seeing that fear of missing out coming into financial markets now. There were a lot of investment banks, a lot of hedge funds, and a lot of traders around the world thought the financial markets were bouncing back too quickly, and they might actually pull back a little bit before the final rally higher. We're not seeing that. And what we're likely going to see is we're going to see these stocks continue to rise unless a couple of things happen. Unless we see a spike in new COVID-19 cases, and unless we go back into lockdown, these financial markets have no reason to stop rising right now. We're not going to see third and fourth quarter company earnings until later in the year, and the market's going to discount second quarter company earnings for the second quarter because part of that, the economy was shut down. So right now, I think we will trade back to those levels that we saw in February, but that's where we're going to see some profit taking, and that's where we're potentially going to see some consolidation, and we might see a pullback. So right now, there is still some fantastic quality blue chip stocks that, in my view, offer great opportunity to the upside over the course of the next few months. And I think we need to be careful in the back half of the year, in August, September, October, November, that period of time when the economies are going to be able to have been open for a number of months, and economists, traders inside investment banks and hedge funds and globally around the world are really going to get the opportunity to sum up whether or not jobs have been won back, whether or not companies are starting to earn profits again, and whether or not we're really genuinely going to see the economy recover, or are we going to contract, and are the numbers going to be a lot worse than people are expecting? So right now, guys, I think the market will continue to rally until we get back to those highs. There could be some profit taking, highly likely profit taking around those levels. That's where the acid test will be to whether we pull back a little bit. But the really big acid test is in the final quarter of this year, when a lot of what is going to be expected, much better economic data and earnings growth needs to happen for stock prices to continue to climb and not pull back. If we can help you here at Trading Mastery better understand the financial markets, there's actually a mini course across on our website on how to get started the right way. You can jump onto tradingmastery.com.au. Until next time, happy trading and investing.